Raf, how are you, sir?
Yeah, well, Matt, nice to be in London.
Good to see you here. Very good to see you indeed. But you've been roaming the globe. I'm seeing you for a while, so a lot to catch up on. Kazakhstan.
Yeah, busy time.
That.
Yeah, Almaty was really interesting.
Yeah,
it's a great time to be
city.
there. Kazatomprom and Kazakh production extremely topical at the moment.
Yeah.
So it was for the World Nuclear Fuel Cycle Conference, which typically is in a European destination. So last year was in The Hague in the Netherlands. And so it was a little bit off-piste to go to Kazakhstan.
Oh, it's beautiful. Isn't it the city of the apples or something like that?
Oh, yes.
Yeah, I remember.
You spent a bit of time there yourself.
I have, on oil and gas, though. Yeah, different vibe.
So we didn't step on any apples, but we did get really good insights into really what was happening, not only with Kazakh supply, but across the whole supply stack at the moment.
Yeah.
Pretty much everywhere you look, there is pressure to the downside, as in volumes of production.
Yeah.
Whether it's current producers,
Yeah.
whether it's Kazakh production, whether it's restarts, collectively, some
Yeah.
are doing well, some are struggling, but collectively the restarts are behind schedule on their volumes, through to the big production centres that are supposed to provide uranium over the next 10 years.
Yeah.
Well, they're facing delays as well.
Well, not least of all, the home team, Kazatomprom.
Yep.
What did they have to say?
Well, they did graciously invite me to a utility fuel buyer site visit.
Okay.
So I went out to visit one of their ISR mines and got the perspective of both the Kazatomprom people we were travelling with, but also the fuel buyers who were on the charter flight and then the bus.
Okay.
It was a good day.
A lot of time spent with these things. And many a slip betwixt cup and lip. Any insight, any thoughts? What was the vibe from that crowd?
The mine that we went to was a joint venture with the Japanese trading company, Marubeni.
Okay. Yeah.
Very well run, very Western, actually quite impressive.
Yeah.
And with ISR, you can't stand on the edge of the mine and count the trucks and say, well, that doesn't make sense. They must be behind.
Right.
You see everything going whir in the background and you say, well, obviously all of those columns are working.
Yeah, yeah.
So everything looked great at that mine. So it was more to deduce the mood amongst the Kazatomprom people and the other participants. You know, there were several joint venture participants at the conference. And look, I think everyone's working really hard to probably hold production where it is at the moment for 2024 and 2025.
Right.
So all eyes on August, when Kazatomprom will give the next update on 2025 production.
Okay.
Now, to put things in a little bit of perspective, if they were to flatline from here at 80% of subsoil use contract production levels, the delta versus the current production guidance, which is 100% of subsoil use contract levels, that delta is about 17 million pounds. That's more than 10% of current mine supply in the world. So it's one for investors, let's say, to pay close attention to, and hopefully we'll get some more clarity leading into August, but I think that's going to be very keenly anticipated by uranium investors and utilities alike.
Well, I bet. In fact, we'll get onto utilities and what signals they're receiving in a second. But that 17 million, that's the kind of equivalent of how many Bannermans? So 2.5, about 2.5 Bannermans at your lower rate.
Three Bannermans at our expanded capital
Expanded cap because the 7 or 8.
6.7 million pounds is our full production by 2030. So
just to make up that delta, that's kind of, it kind of puts everything in perspective. It certainly puts everything in perspective in terms of the capex required to kind of build development plays of that scale and size. So okay. So and who else was there? I mean, what else were they talking about? I'm always intrigued by these get-togethers because they're there for a reason.
Well, the other advantage of being in Kazakhstan is, unlike an event in London or in the EU where visas play a big role, there's a good contingent of Rosatom and Russian people and a good contingent of Chinese people, and even the Uzbeks were there.
Right.
Navoy Uran, the Uzbeki state-owned uranium mining company.
Yeah.
And Olga Skolyakova, who's been a guest on this show, of course, speaks Russian. And so we had a very direct form of ability to communicate with those groups. And that gives you some really interesting insights that are difficult to get in any other way than going to those countries.
Yeah, so that rather manicured path that you're taking. So
Yeah, that's right. You could go wandering off into the weeds.
Yeah. So it's quite lucky that she was there. But if I kind of look at the kind of sentiment around the market with regards to supply, okay, we've seen Niger get a little bit hot and bothered. Okay, I think Global are talking a good game about it's business as usual, which is great. Stephen is saying we're getting on with operations on the ground. You've got companies like GoVX who perhaps are trying to find their way after that letter from the ministry, and you've obviously got not a whole bunch else in Africa. You've got the Namibian players, of which Chinese are involved. You've got some new players like yourself and Deep Yellow, and loads of Malawi, etc. And again, if you added up all those pounds,
there's not enough.
There's not enough, right? Definitely not enough. But with events like you were adding in Kazakhstan, is the Chinese were there, the Russians were there, and this week the Americans were signing bits of paper saying, we don't want your stuff. We want to, well, not just uranium, but also in nickel, and also in copper. There's lots going on there. There's geopolitics. There's ramping up a whole heap here. So someone's going to have to move quite quickly in terms of funding projects like yours if they are to secure it with or without government help, with or without government money, or help from the government in terms of tax incentives, etc. So again, that's why I'm interested in who was up at this venue and what they're trying to. Is it Chinese and Russians saying everything's heading east, boys, and let's because I think Putin was with Xi this week, or was it yesterday? It's all looking very cozy. For companies like you've got to tread carefully. African companies have got to tread carefully at the moment. But you must be encouraged by what the US is up to at the same time.
Look, it's very encouraging for any African producer. Not only does this create a bit of chaos from the Russian sphere of influence and the West sphere of influence, but from China's perspective, China represents about 70% of current demand growth in nuclear power. So there's, for a new mine who's, in our case, a multi-decade mine looking to expand production and double our production in the 2030s, we're obviously looking at that demand growth as being a key area of interest. And for any African producer, they'd also be looking at Chinese access to the West, so Canadian markets, US markets, Australian markets, and figure that African production's got an absolute competitive advantage over those other production centres to access what is 70% of the demand growth. And by 2030, China will be the largest single market, with the added advantage that there's 3 nuclear utilities there, so it's much more concentrated and so on. So I think for any African producer, we've talked for a long time on this show, Matt, about the importance of geopolitics, the importance of being able to face in any direction geopolitically, to have multilateral choice. Now it's starting to come into its own. So the Western production and the Western production opportunities, they're absolutely still there, and they're going to be flat out trying to produce for Western interests who can no longer access Russian material and over time may access less Kazakh material. And in the meantime, we've got the choice. We won't sell to Russia because we've made a policy on that, but we can certainly sell to any other production centre in the world.
That's what I love about this space. You got to get competitive tension, and it's kind of building it up without any assistance from you. You're sitting back and going, okay, 2 big pools, demand pools here, and they're doing all the heavy lifting for me. So it's quite nice. What it isn't doing much on at the moment, despite what my excitement about that competitive tension, is driving that spot price back up to sort of where it was. $90 is not bad. We'd have taken that a year ago, but compared to where it went, just after Christmas, what are the drivers around that going to be? Utilities kind of waking up at some point and going, now's the time. When are they going to do that?
I think what we can expect from utilities is they will play a backstopping role as the spot price increases. So spot price went up to $107 in January off the excitement about the Kazakh production miss, together with excitement of what at the time felt for many like an impending confirmation of the US sanctions bill, which has only just been enacted this Monday. Then it pulled right back. There was a couple of factors for that. One was a little bit of thawing of that excitement. Another was Cameco managed their call that week very well to dispel some of the expectations that maybe they would be exciting the market. And ultimately there was a unfortunate timing with the year balance date for some Japanese traders, and they would, as a result of that, they were looking to book balance at the end of that period.
Yeah.
Now the interesting thing is it came down from $107 to mid-80s, and that's where the utilities were prepared to catch it. So that's where the utilities stood there and said, right, this is pretty good. Let's take what we can get.
Yeah.
Came to the spot market, bought some pounds in the spot market. And now as it goes up, the utilities tend to stay out if they can, because it's not in their interests to chase the spot price up.
Yeah.
So they would rather sit out and then wait for any pullback. So what it does is it ends up marking in little foundational floors that will continue to go up as this sector changes and as utilities get used to the idea that they're going to be paying more for their uranium.
It's kind of interesting time for companies, though, in this sense. As we were talking to Mike Chalmers at Energy Fuels and John Cash over at Your Energy, two guys who are both in production at the moment, right? A small production, £500,000 type production. So not big. They're certainly not going to solve anyone's... Production's production. And I think this is the point I'm getting to, is the fact that you've either got people on your team who have been there and done it and can produce, or you've got people who are very long on theory. And I think what those two guys were at pains to say is, look, it's not too many people who have. And in their opinion, didn't name names, there's a lot of companies out there who are talking a good game. I know you've got a team of people who have, so this isn't but we're talking folks on North American players who perhaps are talking a good game, who are now under a lot of pressure to show me, don't tell me time, right? It's time, the proof's in the pudding. Show me, don't tell me.
Show you that you're a producer, not a pretender.
Correct.
Is what they say in the nuclear sector, right?
I like that. Okay. So there's a lot of pretenders out there. Chrissy Hines would be so happy. Where you go, you've got the money, you've got the market cap, you've got the price incentive, you're out there raising money. Well, a few people raising money at the moment to show that they can get into production. I'm thinking of Peninsula, obviously, perhaps people not too happy about the constant raises required here, but here we are. At least they're going to show that they can get into production. That's something. And we'll talk about the economics and the return on capital invested at another time. But people like NextGen are sitting at, I think what some people would argue is perhaps slightly overvalued and a lot of backfilling to go on raising a ton of money in Australia. You'll go five neck of the woods.
Such nice people in Australia.
The money's there. But again, that kind of just changes their economics considerably. I'm not sure it'll change the timeline in terms of permitting, etc. There's a whole other kind of cost component to that. But there's a few people at least trying. I like the fact that these guys are sort of trying to kind of move and usher things forward. But developers, generally, they all need to work if we are to get anywhere to matching that kind of supply-demand gap. We want everyone to be successful. We need everyone to be successful.
For the health of the industry.
But as John and Mark said, that's not going to happen, Matt. So, again, that's going to drive price. It's going to drive utilities towards buying at higher and higher prices. Good news for guys like you who are at sort of FID stage. What are you waiting for? What's important to you to see out there? I know it's important to the utilities to see where's it coming from, but for you, what's the incentive to get it going?
So we're in a strategic financing process at the moment. Your comment about through no fault of my own, the market's getting better. That's very apt. You know, when you're in a process, when you're talking to quite a diverse group of parties who've got their very distinct willingness to play with different financing structures. Mm-hmm. Market tension does an awful lot of the work. And so we're not in a hurry with that. And what we've done is we've put ourselves in a position where we can keep moving the project forward with our existing cash balance. We've got 30 million in the bank. If we exclude some of the early construction work, because we have started our access road, we have started the construction water pipeline, we're now moving into detailed design. All of those things are construction activities, just the very front end, that are inexpensive, high value for the way that they de-risk the timeline, and within our control. take those early construction activities out of the picture, with all of the engineers and the owner's team and our entire corporate structure, we're moving this project forward at a cost of about $1 million a month. So $30 million, that buys us not only a lot of time, but it also buys us quite a lot of choice as to what we might do next on the early construction, early works timeline.
And of course, you can speed that up or slow that down at any point.
Correct.
For what the market is doing. Market's telling you, I should say.
Correct. And so I feel comfortable that we've got really the luxury of being able to advance the financing process in parallel with advancing the project, probably for the balance of this calendar year.
Yeah.
Before we have to make any questions about do we slow things down at the project?
Yeah.
Do we invest more equity into the project to keep it moving? Yeah. Or have we got a financing solution?
Right.
So in parallel, it gives us a lot of choice. It gives us the ability to continue bringing new parties into the process, gives us the capacity to just watch how this market starts to wear on the risk tolerance and the interest of the parties who are already talking to us.
Okay. And Mr. Biden has decided he's going to step in now. He's signed off this week. That's going to have a dramatic effect in terms of the Russian response. I think we've seen it, which is basically, unless you've got 30, I think there's a 60 days to come up with some waivers, or you're getting a nada from us. Sorry to cross my languages here, but you're getting yet from us. And that'll be interesting to see what happens. So that's another sort of 2-month period where the utilities are going to go, can I get waivers? If I can't, what the heck do I do? And how do I hedge that between now and then? Because everyone's in the same boat. They want to rush everyone rushing on the last day, going, So it's it's going to be interesting 60 days, I think.
It will be, but I think we need to keep all of this in perspective here. So the utilities have been bracing themselves for this type of event for quite some time. And by and large, as a group, they've taken all of the Russian material that they can possibly get under their existing contracts. So if they've got the flex to say, you can have the delivery this quarter, this quarter, this quarter, they've said, we'll have 3 quarters of delivery in the next few weeks. And that's been going on for a while. And to a certain extent, that's actually been unhelpful for the uranium sector, because if you're a fuel buyer and you've got a small team, that's occupying a lot of your attention. So the utilities have got that buffer. It will be fascinating to see what happens in the next 60 days.
Yeah.
This now gives the impetus for utilities to decide if they will or won't apply for waivers.
Yeah.
The word is that a financial penalty is not enough to get a waiver. The US government is saying that, hey, we're unlocking $2.7 billion in various forms of support for the industry. Don't come crying to us about money.
Yeah.
So
can I be clear on the waivers? I was, if you don't know, you don't know, because I haven't read it properly. Which is it a case of you've got time to place orders and get contracts in place, but you can take delivery over the coming months and quarters, or is it a case of that's it, no more new contracts can be signed, or no more new product can be delivered? Because there's two different.
No more new contracts under any circumstances.
Right.
Under existing contractual terms. If you get a waiver, then you can have deliveries up to no later than 2028.
Got it. Okay.
And the criteria for applying for a waiver is very strict. It's very narrow, and it seems like they want to exclude financial cost, financial prejudice from within the criteria for a waiver.
Okay.
And then you've got a social overlay here as well. If there's a 60-day window to now apply for and obtain waivers, it'll be really interesting to see which utilities are happy to do that, and to what extent might they be criticised in the community for it, or might they not be criticised? It'll be a good little litmus test as to sort of where the social temperature is in the US at the moment.
So I know you and I have talked about this over the past year or so, which is possibly slightly longer, about when the Russians would make this move. But it's inevitable. Surprised it wasn't sooner, quite frankly, knowing what's coming down the line. But
And it's been made in a very subtle way.
yeah.
A clever, subtle way. It's respected the terms of the contract.
Yeah.
Because how can they put stuff on a boat if it's going to get turned around again?
Yeah.
So respected the terms of the contract in quite a clever way. It's fired the ball back onto the other side of the court.
Yeah.
And it now puts both the utilities and the regulators under a time pressure that's more acute than the time pressure that they were under. They thought they had 90 days to figure it all out, and then they could decide about waivers.
Yeah. Okay. Well, look, I think we're going to have to wrap it up. We're about to be thrown out of this room. You're slightly ill, having spent 2.5 weeks on the road. I don't want your lurgy. I do love the information that you have access to, and the fact that you're very happy to share with the world. So thanks very much for your time. I will shake your hand. It's just.
We've got to explain to everyone it's a sinus infection, for goodness sake. It's not a cold. Look it up on the internet. It's not contagious. But anyway, it's not fun.
TV drama.
Come on, Matt.
Okay, we'll safe journey back.
Great. Thank you. Cheers.